Afternoon, everybody. I'm Singa from Vunani Private Clients. I sit at the trading desk. Today, we're just taking you through to the basics of investing, really, which is just an introductory presentation on what is investing and how you can get started. So, going forward to the next slide, we look at what our contents are. We'll first start with the basics of really what the basics are, which is what is the stock market, types of investment products, how to trade shares, the benefits of investing, are you a trader or are you an investor, and what do you need to get started. The basics here really are that when you are participating in the stock market, you are then looking to start investing. You do so by buying shares of these companies that you see here. I've put a few brands that you will probably recognize, like your Sasol, MTN, Anglo-American, PPC Cement, etc. You as a buyer becomes part owner, or what we call a shareholder of a business, when you buy shares which are commonly known as common stock. You are therefore buying equity in businesses. As a shareholder, when you've bought equity in a business, you then become a shareholder. Shareholders have the right to vote and receive dividends as well as subscription privileges. That is what you get in return by buying a share or common stock of a company. You are really investing in management, in profits, and ultimately the assets of the company. So when you look at a company that you think has got a great future, you think that their assets will grow, therefore your investment in that company would grow with that growth. So how do stock trades? The purpose here, the purpose of stock market is to facilitate the exchange of securities between buyers and sellers, reduce the risk of investing. Just imagine how difficult it would be to sell shares if you had to call around the whole neighborhood trying to find a buyer. So what a stock market do for you is to bring together a buyer and a seller. So that is one of the functions that the JSE undertakes in the South African context, in our market. So how you should really look at stock market is really what the picture here shows you. It's like any other market, like a vegetable market, where people will sell different types of veggies. Sellers will meet buyers, and the prices will be discovered as they exchange money for goods. That's what a stock market is all about, but in a computerized, sophisticated manner. But in reality, what a stock market is the same as what you see here in this picture, a vegetable market. Still on the basics, the stock market can be split into two main sections, the primary market and the secondary market. What the primary market is, it is a market where new issues, which is new shares that are being sold for the first time, are conducted. So when a company comes to the JSE and they want their shares to be sold to the public, they are taking a process that is called initial public offering, an IPO. That is the market for shares that are going public for the first time. That is what we call primary market. Secondly, we then have a secondary market where all subsequent trading goes in that market. Participants that are involved in that market will be individuals and would also be institutions. Most of you who have a little bit of familiarity with investing, who perhaps have bought an investment product at some point in their lives, you would then have participated in the secondary market. Like I had mentioned in the previous slide, secondary market is a market in which existing securities or shares are traded. One other thing that you need to also keep in mind when we talk about the secondary market is that the prices of shares or securities, by the way, A share or a security on equity is one thing. It's just different words which are interchangeable. You will find that a lot when you are approaching investing in the market. Prices of shares in the secondary market are determined by market participants, which is a buyer and a seller, through demand and supply principle.